In this video, we're going to talk about how we're going to be able to simplify top-down analysis. Now, top-down analysis is overly complicated by so many different traders. So, in this video, we're going to simplify it. Now, let's address the big misconception of higher time frame directional bias. This was something that I had a misconception of, and so many different SMC and ICT traders do as well, even retail traders. Higher time frame bias does not mean you have to swing trade. We can day trade with the higher time frame alignment. Now, again, I was guilty of this. So many different people that I've known are guilty of this, where they automatically assume that if you're trying to determine a higher time frame bias, or you're looking at the higher time frame, that you're automatically looking for a big move and you're looking for a swing trade. You hear it all the time. Intraday traders, scalpers, everyone talks about, oh no, I'm just looking for the intraday move. I don't care what's going on the higher time frame. Now again, if that's you, then stick along because I'm going to make this process so much easier on how your day trades and scalps can have a lot more velocity and how you can have a much higher risk to reward. So let's go ahead and let's break it down. But first, if you want access to the PDF slides, make sure to join the public Telegram, link in the description below, and check the pinned messages on August 8th if you're watching this on a later date. Now, time frame analysis. These are the time frames that typically use for higher time frame going down to the lower time frame. So, we're going to get into it. For our narrative or our bias, meaning direction, I'm typically watching the weekly time frame, the daily time frame, and the 4-hour. So again, it's very important that we determine which time frames we're determining our narrative and bias. Now, for entries, I'm using the hourly time frame, the 15-minute, and the 5-minute. These are typically going to be my intraday session time windows that I'm watching for. Now, higher time frame discussion. For our higher time frame analysis, we need to identify the current market profile. So here's a few questions we should always ask ourselves. Number 1, are we in a continuation profile? Number 2, are we in a reversal profile? And number 3, are the timeframes in alignment? So let's break this down further. Time frame alignment. Typically, we want to be in sync with the markets on all time frames. So if we're watching the weekly, daily, and 4-hour, ideally we're all in the same type of direction. So if we're in a continuation profile where the market is bullish, we're looking for a continuation for buys, or if it's a reversal profile, but the reversal profile is showing that the weekly, the daily, and the 4-hour are all aligning for a potential reversal to the upside, this can also constitute a potential bullish signal. Now, inversely for sells, if we are all in alignment on the weekly, daily, and 4-hour in terms of a continuation where the trend is lower, typically, again, this is going to be ideal when we have all three in alignment. Again, same thing. If let's just say we're at a point where the market is going to reverse to the bearish side for a near-term reversal, if we have the weekly, the daily, and the 4-hour all showing signs that there's a potential bearish reversal that's coming into the marketplace, this is also good for us to understand. Now, ideally, we have all the time frames in alignment. So now let's get into discussion of understanding our market ranges. The market travels from discount to premium and premium to discount. So what does this mean? Let's go ahead and let's take a look. Typically when we have, let's just say the market that has an impulse, right? The market is not going to just go up forever, guys. The market makers and the institutions want to be buying at fair value. They want to be buying at a discounted price. And whenever they're shorting, they want to short at a premium. So in a bullish swing, for example, anything around the 50% of that swing and lower is going to be constituted as a discounted market. Inversely, anything on a bearish swing, so like let's say the market has a push lower, the market is going to want to go at the very least to the 50% mark in order for us to have a potential sell, or the market can accumulate more sell positions. Now, why does this happen? Because think of it like this. If you're buying, let's just say if you're buying any type of product, so let's just use socks as an example. And the price of the socks is over here is $1, and the market for inflation or maybe whatever the supply and demand price is at $10. If you want someone who kind of wants to wait to buy at a bargain or to buy at a deal, you're going to want to wait for the market to head back to about 50% of that. So you want to be able to buy at $5 versus chasing it at 10. It's very similar to the market makers and how the institutions want to position themselves. They want to get in at discounted and premium prices depending if they're long or short the market. So let's talk about profiles. Now, let's talk about profiles. The market, guys, is going to do one of two things. It's either going to have a continuation. So for this example, there's a market push up. The market comes back into a discounted level. So maybe there's some sort of order block, fair value gap, or something that's present here. And we're going to have a continuation. Inversely, the market is going to have a drop lower into some sort of discount. Maybe the market finally takes out liquidity pool. And we're going to have a short-term reversal back into a premium. So from this overall drop lower, we're going to have at the very least a relief move or a market move back into a premium. So let's get into the charts and let's take a look at a few examples. And let's also use examples that were not in hindsight. So here is a USD CAD reversal profile. Again, I talked about this with the private group where there was a specific reversal setup that we were seeing. And it also had a bunch of liquidity that was also included within this. And also the Euro USD continuation profile that I actually posted in my public Telegram of over 20,000 people, where we were looking for a continuation profile on the Euro. So I'm going to show you guys how we're going to do a top-down analysis with everything that we just talked about and how we can use the lower time frames to enter. So let's take a look at that Euro example. Now again, guys, this was called live in the public Telegram, and I like to use that just because it showcases like it was in hindsight. So it kind of adds a little bit to the analysis. Nonetheless, when we understand like the power of an impulse, right? When we have a swing low to swing high, defined with specific variables, we know that if the market has a retracement lower into a key level, so as we do here, we have an impulse push up from swing low to swing high. The market comes back down into this fair value gap. So let's identify that discount market. We have this fair value gap that's present. So there's a potential for a higher low. So the moment the market comes down into this area, we understand that this is our potential higher low point and this is our potential higher high. So some people call it internal to external range. Again, this is just basic structure. And this is essentially a potential higher low. And if there's going to be a higher low that forms, which is essentially a low that is higher to the low to the left, we know that the market is typically going to go higher and take out and make a new high. So if we understand that at this current junction time, even if let's just say you miss this entry, because this is a weekly time frame, we can identify that the market is going to go up to here. Now, some people will say, well, it's right there. But the thing is this, when you're on the higher time frame, like again, when this market closed, right? From here to here is a solid 40 pip move. And obviously on this day, we went up almost 100 pips. And this is what I really want people to understand about higher time frame bias and top-down analysis. Because when we have our analysis on the weekly time frame going on to the daily, we even, again, a move from here to here is a big range because the market is showcasing direction on a higher time frame, so these candle ranges are going to be much higher. So let's go ahead further. So now we know that the weekly is potentially bullish. And again, let's go down to right now here on the daily time frame, we also have a displacement move. So this was after the news event. So the market again had a drop lower. We came up into that fair value gap, even came into the daily fair value gap, and now we have our displacement, which is a very strong energetic push at that key level. So again, guys, we know that we have our higher time frame bias of we know that the high is going to be possibly tacked in. We also have on the weekly time frame, if I go back to it, that there's liquidity that's resting here because these highs were never taken out. And what else do we have? We have this imbalance point as well. So we have premium levels above marketplace that we can go ahead to target. So again, the market is at a discounted range. We push up. Even if you miss this move, that's fine because now we still have this area for potential higher highs and this area of premium that we could potentially target. So let's go back to the daily time frame. So we have this energetic push. So what do we see on the 4 hour? The 4 hour is going to also be in alignment, and we're going to see that everything is really in conjunction with one another. Now, the key thing is this. Now we know that every time frame is aligned. We know that essentially liquidity has been taken in here. When we identify this, potential liquidity has been taken, potential accumulation, now displacement. Now, the key thing is this. When we are doing our top-down analysis, we understand where our key levels are. We understand where our objectives are. Now, how do we look for an intraday time frame entry? Now, this is where I go down to my lower time frame, and this is where I incorporate daily profiles. Now, if you guys want a full separate video on daily profiles, let me know in the comment section and I'll make one specifically on that, but we'll talk about it briefly. So now I know going into Monday, Tuesday for the new week, I know that I'm targeting this high, and I know I have this as a potential objective. So when we go down to the 15-minute time frame, and we'll go ahead and we're going to put our day text indicators so that way we can see the days of the week. And I'll make sure that the Asia session indicator is also on. All right, so now let me go ahead and play this further going into Monday. So again, what do we have here? We're going to wait and see how the market ultimately plays out. And what I'm looking for on an intraday basis, guys, so on buy days, what do we want to see? We want to see an Asia range form in here. We want to see like an Asia session range form. So the Asia session range, if you guys, I talked about it in my previous videos, where we're just seeing a consolidation going into about midnight, and then during London Open or New York session, we see a drop lower, and then the market has a potential push up into some sort of draw on liquidity. Real briefly, this is going to be our ideal buy scenario when we have the Asia session range that's created and the market drops lower. Again, I posted this on my video on Tuesday, so check that out if you guys need a little bit further instructions. However, we're going to Monday, and now we're going to see the Asia session range. So we have this Asia session range indicator formed, and look, now the key thing is this. We want to see the market show signs of bullishness after. It's very difficult to buy when the market is dropping like this. So sometimes if we wait for a confirmation, this will give us an indication for an easier entry where the market forms low, but then we shift bullishness. So let's wait. M15 time frame, beautiful. Now what do we have here? We have a sweep of the Asia range low. We have this low form that might be the low for the day, and we're also inverting this fair value gap. So when we play this further, the market has that displacement push up. So now we're going to go and we're going to wait. We're going to have to wait because at this point, the market has this overall structure. We swept liquidity. Now, you could have taken this entry in here, essentially the breaker point, because the breaker is essentially this full range higher before the market moved lower. And if we draw that out in time, it does hit that area, but we'll wait further. And the market does hit it one more time going into the New York session in here, where price again filled a little bit of this imbalance. We tested the prior high structure. And we have this, again, this objective on the weekly time frame, because objective 1 has been met, but we still have a second objective that has not been taken yet. So when we play this further, beautiful, beautiful entry. Now, some people will say, hey, where would your stop loss be in this situation? So again, if this is assuming you don't go down any time frame further, essentially the way I like to do is I like to put it below the fair value gap candle. So let's go ahead, zoom into this. So we have fair value gap candle 1, 2, and 3, right? So this first candle here below the order block is typically where I'll put my stop. And yes, this is a bit of a wide stop, so I do agree with that, 35 pips. But again, this was still good for almost 2R. The range on the day was just very big. Now, if you want, you can go on the 5-minute and see if you can see maybe a structural break somewhere in here after the market hits this fair value gap. It's really up to you how you want to play it. Now, let's go ahead and let's take a look at the dollar CAD example. So here we have dollar CAD, and I'm going to break down exactly the trade that we took inside of the Discord. Now, the market at this point in time, we talked about it, right? The market is going to be doing a couple things. It's either going to be reversing, or it's going to be in some sort of continuation profile, or it's going to consolidate. So when we start on the weekly time frame, we know that dollar CAD has had multiple weeks up, right? So we had 1, 2, 3 consecutive weeks, and then this week right here, which is still forming, we took out all this liquidity. So we took out the liquidity above this high. We also took the liquidity above here, and we had a very strong aggressive push. Now, we understand that we're in a potential scenario where the market can go from a premium down back to a discount. Does this mean that this is a high, long-term high on dollar CAD? Not necessarily, guys. What we do know is that there's a fair value gap that's resting here, and we know that there's an additional fair value gap that's resting here on this impulse push up. So all we're looking for is a market move back from premium to discount in this example. So let's draw out the fib. So we have our swing low to swing high, the 50% mark. So I'm going to leave that there. Now let's go down to the daily time frame. The daily time frame is my trigger time frame for this setup, because when I go back and I select the bar, this was the specific day that I talked about it. And I said, hey, I am looking for a potential sell on dollar CAD simply because we have our engulfing bar. Now, if you guys are interested in learning about the engulfing bar, I do have a free training that's in the link in the description. Check that out. I talk about what the engulfing bar is. I have other videos on this channel, but check out the free training. Nonetheless, it's a candle that essentially sweeps the prior liquidity above, and we have a closure. Now we have a strong bearish closure, so this indicates that price has swept liquidity and there's displacement. Now, how do I trade this? So I'm going to go ahead and pull my indicator on, and I'm explaining what it does. Essentially what happens is it defines this range, right? So essentially when I get the engulfing bar, it plots out the full range, and we have the 25%, the 50%, and the 75%. Now, typically I'm looking for, potential trades that's within this area. However, I'm going to go down to the 4-hour time frame, and we're going to go, again, top-down analysis approach. So what do we see on the lower time frame? And let me just clear up some of these indicators. So on the 4-hour, from swing high down to swing low, right? Again, we swept liquidity. We swept we swept the prior week high as well, and price had to push lower. What do we have here? We have a fair value gap. So let's identify that. That's essentially going to be our displacement range. So look at it from this lens. We have our confirmation on the daily. Our 4-hour is now showing bearish structure. Our daily was showing bearish signals. On the weekly, we're at a premium going back into a potential discount. Again, that fair value gap was not traded to. So we have this specific low in here. So we understand that if price comes up into here, now we're just looking for a lower time frame entry. So guys, notice our daily time frame and our weekly time frame and our 4-hour time frame. They were all indicating potential reversals and potential sells. So let's get into the lower time frame now, because we do understand our narrative on the higher time frame. So now that we're on the M15. So again, going into the example of the Asia session range, we have the Asia session consolidation. Price, again, inversely, we're looking for potential sells after we sweep the high. So we have our premium level that's identified. And look at how price reacts. We have that wick where we could start to see a potential stop hunt. And the market, again, this is our structure. So we have our swing high, swing low. The market pushes up. It doesn't necessarily break the structure down here, but we're going to start to see that the market has bearish pushes. So once the market starts to break down to the downturn, on this next candle here, this was a potential entry, because when we close below that, we then look for the next candle to kind of push up, going into this area of this order block, essentially, this prior range, where the market went up, drop lower displacement. So on that candle wick, when this candle was forming, that could have been a potential entry, because now we have a potential market structure shift. The market shifted from bullish structure down to bearish, and now we're just looking for a potential continuation. So again, there was another wick that formed in here. This could, while this candle was forming, this could have been a potential reshort on this prior low. So again, this is kind of like our breaker point, and then off to the races, where the market ultimately heads down to our objectives. Clears out the Asia session low, and as we're going to see here, ultimately does take out the liquidity, resting beneath here, and essentially giving us our market range. Now guys, think about it, if this was a day trade, if you took this entry short, for example, in here, let's just say you took an entry there and you were able to have a good stop loss because it's an M15, but you understand that the draw on liquidity is somewhere around here because this is their higher time frame objective, right? So this trade right here would have been a 3-to-1 risk to reward. And this is the power of it. And again, this went even further. So if you're someone who had like a little bit of a deeper target down here, this could have went all the way up to a 5-to-1 risk to reward. Now, again, hopefully this video kind of shows you guys the misconception that most people have when it comes to higher time frame analysis, because what happens is when you understand the higher time frame and you're really good at lower time frame entries, you can get some really powerful day trades. Now, if you guys enjoyed this video, make sure to subscribe, because I will be launching at least 2 videos a week for the month of August. So you don't want to miss out on all the fun. Make sure to check out the public Telegram if you want to see more videos like this.